The 401k parallel that you drew, I think was very fascinating, and that was the driver of a structural and secular bull run in the US. It will be great if you could share with us what percentage of the pension funds eventually have exposure to US equities, and given that in India we've barely reached about 12% or so right now.
So 12%
of the pension funds
assets in equities.
Of assets are in equities.
Oh, well, they could get a 50%. That wouldn't be outlandish. So we're just in the very beginnings. This is just extremely the very early days. And obviously, you just need the tax incentives to encourage people to invest in equities, but my understanding, they exist. So to me, we're right at the beginning.
And a lot of it, of course, will also depend on how the economy itself does, right? When people have, as the country gets prosperous, and that's what happened with the US as well. Because, I mean, one could make the argument that those who can invest in equities and those who have the disposable income are already here. And now the country's got to get richer for more and more of the population to get into equities. I mean, would you? Yeah,
but from my understanding, these pension schemes are recently conceived, right? With the tax incentives.
The NPS.
Yes.
Relatively newer company.
So to me, if it was like the test match analogy, you're at the first morning session. It's really very early days. So obviously in the long run, you're right, that's an issue, but I wouldn't. That's not that to me, we're right at the beginning of this whole development.
How much of, just to take off...
But you also have a history, you have a tradition of a stock market here. You see in China, you didn't have that tradition. You didn't have the legal infrastructure for a stock market. So India's had a long tradition of a capital market, so that helps it as well.
Got it. Ramesh Damani here, as I was saying earlier, was one of the early backers of public sector stocks, defense stocks. And those have been the clear leaders of the bull market. Ramesh, I just want you to share your latest thoughts and perspectives on it. I mean, Chris earlier was saying that he would bet tactically on consumption, but the big story still remains infrastructure. And a lot of it is sort of conducted through public sector enterprises. So just your thoughts.
Yeah, Prashant, Chris, I mean, what I've noticed over various bull markets, I've been in India for 30 years, is that bull markets always have leadership. In the 90s in India, the cement stocks led, 2000, the tech stocks led. This time it is the public sector stocks leading, which was the most unloved, unknown, under-owned sector, which of course is a prerequisite for it to become market leadership. And a lot of people are left out feeling because they didn't enter it, and they're saying, first it was, oh, I'm not going to buy PSU at any point, no matter how cheap it is. Now they're saying, oh, it's too expensive, that's why I don't want to buy it. But the fact is the stocks have gone up 20x, 30x in between that time. So I believe that this leadership will continue because of better corporate governance, more government expenditure. And, eventually all bull markets end, and so will the bull market in public sector stocks, I'm sure. But till then, I think there's a party going on. What do you think?
No, I agree. Now, the defense sector I first heard about 3 years ago, but in terms of my portfolio, I've missed the defense stocks. But the problem in India is what not to own.
Right.
So my portfolio has been basically built on the... where the performance of my greed and fear portfolios come from the last year, I would say in property, energy and infrastructure, but the missing part of my portfolio is defense. So let's say there's a sudden resolution of this conflict, maybe the defense stocks will correct, and that will be an opportunity to add.
Please rectify that for us.
Yeah. And then another emerging area in which I'm not invested in, but I mean it's definitely getting more and more attention, is the contract manufacturing sector.
Right.
I believe you call it EMS.
Yes.
So this is an example of another emerging sector.
You talked about energy, Chris, though. Would you bet on the old fossil fuel energy, the oil, coal, because you think there's still a long way to go before energy transition? Or would you say, I'm going to avoid that and bet only on solar, renewable, et cetera?
No, I've got the traditional energy sectors. To me,
actually performed well.
Yeah. So no, I believe that's a hedge. That's been a hedge. I've been telling investors, well, they got obviously crazily cheap when oil went negative, so there was an opportunity there. But also, frankly, if you want to hedge geopolitical risk in a global equity portfolio, your only practical way to hedge that is energy.
Energy.
And actually, even in an Indian portfolio, if you want to hedge the risk that oil suddenly goes up, because obviously this Middle East situation could I've been primarily focused on Russia and Ukraine as a risk, but the Middle East is a potential risk. The only practical way to hedge that is energy, and these energy stocks pay good return, dividends. They're defensive, but they could be like tobacco stocks. Tobacco stocks the last 20 years have been good performers. So
Absolutely brilliant performance, surprisingly.
Yes, I would make the analogy with tobacco energy stocks. And also, the reality is fossil fuel is going to be around for a long time yet. Obviously, there's been an ESG constraint on some investors to own these stocks. But I'm not sure how big. I'm not sure ESG is not really big in India, right?
So, getting there.
Yeah, so ESG, in my view, peaked as a movement in the fourth quarter of 2021. There's always been a big belief in ESG in Europe. In the US, ESG only really started to exist in recent years, but it's now become part of the political divide. So for one side of the political factions in America, ESG is like a villain. The other side, they believe in it, so it's become politicized. And in Asia, ESG has never really taken off, as far as I can see.
It's there in every balance sheet as a disclosure of what they do for ESG. But Chris, I want to take up another point. You talked about inflation. Do you think the G7 will get inflation back down to the 2% rate that we enjoyed? And will it continue at 2%? What are the risks to that?
No, my base case has been that inflation in the US is likely to end up a bit higher than where it's been, maybe 3-4%. Because my base case is when push comes to shove, the Fed will prioritize the economy and the labor market over inflation. The surprise to me, though, I have to admit, is how resilient the US labor market has been. I would have thought we would have seen more clear weakness of the labor market by the start of this year. I think the Fed wanted to see labor market weakness because the Fed wanted to start cutting rates earlier, because I would have argued 2 or 3 months ago that the Fed wouldn't want to cut rates after July, because their concern would be that they would then be attacked by Donald Trump and be politicized. However, I've now changed my mind on that. I now think but as of data up till today, I think the base case is the Fed cuts rates in September after the Jackson Hole meeting. And I think the political constraint on the Fed's been removed, because the reality, even before someone tried to kill Donald Trump, the Biden health issue basically has meant that Donald Trump's in a very strong position, and all Donald Trump needs to do right now is to do something which is not naturally easy for him, and that is to stay quiet and be the unifying candidate, because so attacking the Fed would be crazy for him to do now. Right. And so basically, I think the Fed can cut rates in September based on data right now, and that's why you're seeing the US equity market, getting more risk on again.
Chris, sorry.
Go ahead, please.
Chris, if you could throw some light on the difference in the performance of the small caps versus the large caps in the US and the other way around in India.
Well, I would have to tell you, India is the only stock market I'm aware of right now where the small mid-cap sector is doing way better than big caps. Absolutely unique. And it's driven by this domestic phenomenon. This is not replicated in any other market right now. On the US stock market, the consensus view at the start of the year was that the US has achieved a soft landing and the US equity market would broaden out. The exact opposite's happened. So the US stock market's become narrower, which fundamentally is not healthy. However, it's not a speculative bubble, because I can show you a chart, and the Magnificent Seven earnings growth is just way superior to the broader market. So, yeah, this.
But in the last week, it's been broadening out.
Yeah.
The Dow and the S&P has been broadening
That's because the market now is getting more optimistic on a rate cut.
Rate cut, absolutely.
But obviously, if the rate cut reflects a weakening economy,
that's not good.
yes. Yeah. So, but that's why it's broadening out. But the key point is NVIDIA performance is so far fundamentally supported by phenomenal earnings and revenue growth on the part of NVIDIA, which is obviously the star stock.
I think